We are here. Hello. Welcome, everybody. Happy New Year to you, audience of wonderful content creators. It is so good to see you. We are almost 2 weeks into 2023, which I don't know, it seems mathematically impossible because according to Jenny's internal clock, it's still 2020. I don't know if anyone else is living this Elsa Frozen kind of life, but I am definitely when someone says 2023, I feel like it's like a personal attack upon me. I'm like, what are you talking about? It's 2020. That's not possible. But we are there, whatever the year is, according to the calendar. We are thrilled to have you with us for this episode of Mediavine's Teal Talk, the show where we talk anything and everything about the business of content creation. I'm your host, Jenny Guy, and I'm hoping sincerely that your year has started off with like a nice, gentle bang, not like an aggressive bang, like a nice, not a whimper, somewhere in that sweet spot there in the middle. So that is our hope for you. In addition to post-holiday blues and body woes from too much eggnog and cheese, which I'm guilty, too much eggnog and cheese. Another thing that inevitably comes up in January is tax anxiety. If you live or do business in the US, Tuesday, April 18th is your tax day. And while anyone and everyone can feel nervous about filing or some apprehension there, it can sometimes hit small business owners and especially content creators especially hard. But that is why we have Jasmine here with us today. For the first time on Teal Talk, I'm going to read some very impressive things about her. So one moment, please. Jasmine Alzubi is the founder and CEO of Momen Tax Services in Orange County, California. She currently services clients in 40 plus states nationwide and 15 countries worldwide. After graduating from USC with a degree in politics, philosophy, and law in 2014, pick a lane, Jasmine. Just kidding. She dove, I mean, you had a lot of interest. It's good. She dove headfirst into the entrepreneurial journey of becoming the creator's tax strategist and coach. Jasmine thrives on working closely with her clients, teaching them everything they need to know to excel as self-employed individuals. She prides herself on helping her content creator clients bridge the gap between being a content creator, transitioning to CEO, meanwhile coaching them about the money-saving tax strategies and necessary mindset along the way. Welcome, Jasmine. Thank you so much for being here.
We are so excited for having me. I am so honored. I did my Girl Geek scream for you earlier, but I am so honored to be here. Thank you so much for having me.
We are thrilled to have you, and we are very excited to be talking about this topic because, as we were saying before we really started to dive into it, it's a unique world being a digital content creator and trying to navigate that with regard to taxes. So having somebody who is really experienced in that area is super important. So guys, we have got Jasmine here for you. Welcome. Please go ahead and say hey in the comments. And we're going to ask my first question to you guys. Have you gotten a start on your taxes for 2023, 2020, 2022, 2023? Tell us in the comments if you want to. Let us know. If not, just say hey. And if you have questions for Jasmine or myself through this episode, please post them in the comments and I will get them to Jasmine. All right. I'm going to start with the question I just asked Jasmine right before we went live, which is, how did you become a tax expert for digital content creators, for publishers?
Sure. So I would say, of course, having the fundamental knowledge of taxes and accounting and all the things that legally you have to do to be in compliance was the base foundation I had to have anyway. So I was working with just individuals in all parts of the country. And then some of my childhood friends grew to be big content creators, to be honest. And so because I was already working with them when they were just working W-2 jobs and they started to add these streams of income to their financials, what happened was I started to have to look a lot closer into what they were doing and what was happening, because I realized that these were not people that were just going to get a W-2 at the end of the year or a 1099, small 1099 and say like, here it is, I did Uber, I did this, and I have a 1099. I realized that these are folks that are getting 1099s from multiple places and not really knowing what to do with it and which expenses relate to which 1099 and so much other stuff. So I got my feet wet and started really learning about what the specific needs were, because I had the opportunity to work with friends that were social media influencers that, like I said, grew to bigger fames. So that's how, as I was clarifying for you earlier, not to say that I learned by working with them because the foundation is essentially the same for everybody, but I learned what unique specifics they need for them to be successful in this. So from there, I started to create a Facebook page. Created a Facebook page and grew it to about 15,000 self-employed people. And so I was really specifically working not only with just content creators that are influencers and bloggers and YouTubers and things like that, but then also just self-employed folks that were like teaching English online or, Etsy stores and things like that. So that's how I got into it. And then I met my good friend client who became a good friend, Laura Peters, and she brought me on to be more involved in the online community. And then that led me to learning about Mediavine. And here I am.
Yes, well, we are thrilled to have you here. And from the comments, we've got one has started, but it looks like we have a lot of people who have not started. So as they are starting that journey for this year, let's just dive right in. What is the number one thing you see creators get wrong when they do their taxes?
I would say that the number one thing that I've seen creators get wrong, and politely, respectfully said, there is a lot of things that they get wrong. But the most costly one ends up being that they leave a lot of money on the table by having the fear of deducting expenses. So I would say that the number one thing that creators get wrong is that they are worried about taking expenses, because what I hear a lot is, I don't know about that $100. Let's just leave it. What is it going to save me? $5 on my tax return? I don't want to get audited for saving $5. When in reality, that's not the right mindset to have about it, because it's not, I forget about that $100. I don't want to save $5. It's about having financials, bookkeeping, accounting to have your expenses, no matter how big, no matter how small, because leaving deductions on the table is just as problematic as taking wrong deductions. Either way, it results in a faulty tax return, right? And I have personally seen tax returns get audited that totally ended up in the favor of the client. Like they got audited for reasons of like clerical errors or computer errors or whatever. And then while this, what are they called? IRS agents are reviewing their tax return during the audit. They're like, hey, so like, do you not have a phone expense? Like, how do you run a business with no phone? Or like, do you not have an internet expense? How do you run a business with no internet? And so the audit results in like, hey, you need to add this. Hey, you need to add this. And they get a couple of bucks back. So the IRS isn't always terrible, even though 99% of the time they are. Not always. There's that small chance that they will look at things to make sure you have also taken advantage of what you should have taken advantage of.
That's solid.
Yeah, I would agree that too. I personally had a tax return who was a good friend of my brother's get audited. I did not prepare the tax return, but when they got audited, they came to me, of course. And I was looking at this, trying to figure out like why they got audited. And point blank, I asked the agent, I said, can you just give me some internal inside information, like on what caused this and what you're looking for here? And she said, to be honest, I looked at the tax return and they had one expense on there. So that sometimes tells me that the tax return is being filed for a different reason that might be related to a fishy reason that's not, just filing the tax return, because most businesses don't have just one expense on the tax return.
Right.
And it led me to believe that maybe they were filing a faulty tax return for a different reason, maybe for who knows? I won't get into that. But for whatever reason, she thought maybe these people are filing a tax return for a fishy reason. Then I got into it. I showed them everything and hey, they have this stuff, but they didn't think it was worthwhile to take the time to do the bookkeeping, to find the transactions on their bank statements, to gather it up and put them in like categories and put them on the correct tax return category. They were just like, the amount of time it's going to take me to go through my 12 months bank statements is not worth the amount of money I'm going to save on the tax return, but it caused an audit instead.
That is great feedback. So always take the time. And you're saying the number one biggest thing is leaving money on the table. Yeah. Also could be just taking the path of least resistance and listing only one thing. So in terms of, this sounds like year round, how would you recommend people keeping on top of those deductions?
Sure, absolutely. So you can always use a software. I personally use QuickBooks. I can share some discount codes for folks that are just getting started, so that if they don't want to take on that monthly expense too soon. But there's always a software like QuickBooks that you can use where you would just connect your bank account. And and I don't want to segue too far away from this. I know we will talk about this later, but please have a separate bank account. So when I say connect your bank account, I'm not referring to connecting your personal bank account. I mean, have a separate business bank account, even if it's not the actual, tag of a business bank account, because for some reason that bank won't create you a business bank account. As long as it's a separate checking account that you can administer the income and expenses that you are using for your business, you want to take that bank account and either connect it to a software like QuickBooks, so that the transactions are feeding in and now you're doing bookkeeping and accounting, using a software. Or if you don't want to add tech or you don't want to take on the monthly expense, just have an Excel spreadsheet for yourself, a Google Doc spreadsheet for yourself. And that's a little bit more tedious in work, because now you got to go to your bank statement and take the transactions and put the numbers, or, convert it to, there's Excel. There's probably tech people out there like, what is this lady talking about? You can just download it and convert it to an Excel sheet. But point being that you can either use a software or you can use a spreadsheet, and then just, if you're using a spreadsheet, separate the sheet from the income transactions that you're receiving and another sheet for the expense transactions that you're incurring. That way, at any point, you can just sum up your total income, and you can, sum up your total expenses. And I mean by categories, of course. So you're reviewing your bank statement and you're like, okay, this is all gas. Maybe have a sheet for all the gas and put all your gas. This is phone expense. And then, hopefully a lot of the expenses are just recurring expenses like internet and phone and subscriptions and dues and things like that, so where you only have to be worried about like specifically finding the day-to-day expenses you might incur. But nevertheless, and either way you choose, you absolutely want to make sure that you have a separate bank account, because then you're not worried about going through 12 months of your bank statements from the whole year and separating out your groceries and your shoes and your, that kind of stuff. It's, you're focusing on this bank statement, and at a minimum, that everything on here is a business expense. You just now need to put it in the correct category, which is a huge win for an IRS audit as well, because an IRS audit is not always about, the IRS auditor is just another person sitting on the other side of, sitting on the other side of the table. So they gather surrounding information about what you're doing in order to determine the results of the audit. So I say that to say, when you're sitting in front of an agent and you have like 6 different bank accounts and statements, and you're like, oh, wait, hold on. No, that expense is here. And oh, wait, hold on. No, I have that here. I've had agents that are like, you know what? I'm not dealing with this. I'm closing the audit at this because you should have been doing this, and I'm not taking the extra time to spend more time on this. But
interesting.
If you have one bank statement and all of your business, income and expenses is here, now you're not trying to get the person to believe in your compliance, that you've been in compliance. You're just trying to get them to see that your deductions are legitimate.
That makes perfect sense. I'm going to jump to a question here from Candace.
Sure.
I'd love a trustworthy list of all the deductibles we should consider. I know I always forget something.
Absolutely. So there's a couple of things. So there's no list on the IRS. There's 79,000 page IRS code. Not one of those 79,000 pages is an actual list of deductions, because every industry could have different deductions. What's a deduction for you in your business may not be a deduction for me in my business.
And that would also be helpful. We don't want to do that. Let's don't.
Right.
Let's
Absolutely.
be helpful as the IRS.
Absolutely, for sure. So what I've done specifically for the content creator community is I didn't necessarily want to mention this right now, but because the question asked, I'll say I did create a course specifically for taxes. It's a tax and accounting course specifically for content creators. The biggest part of the course, outside of the video modules that I walk people through on the biggest topics for content creation, is a 30 deductions ebook for content creators. And it's not a list. It's a list with explanations and examples and who, what, when, where, what, why of that deduction that could pertain to you, right? Because like most lists on Google will be like, oh, telephone expense. The very first question I get is, well, how much of it? What percentage of it? How do I decide that? How will I know I chose the right percentage? So a list by itself isn't as useful as genuinely understanding why that tax write-off is a legal write-off for you in your business. Because as I said, it might be different for you than it is for me based on what we do.
and feeling confident in that. So definitely telephone. Can we spoiler a couple of other ones that you have on that list? We will be sharing, guys. Don't worry. We will be sharing at the end all of the links to everything that you need to connect with Jasmine and find her course. But just a couple here.
Yes, absolutely. So for example, let's say like travel, right? A lot of people think that, oh, well, I can't, there's all these like tax TikTok advice is like, just go on vacation and deduct your, it's okay. You just had to have worked, right? So then your plethora of questions is like, well, how do I deduct vacations? Well, you're not deducting the vacation to call it a vacation, right? I wouldn't be calling it a vacation as a write-off. I would be calling it a business trip, number one. Not to say that what you call it is going to make it legit versus not legit, but my point is to say that the mindset needs to be that you're not deducting your vacation, you're deducting your business trip. And the way that's happening is you need to make sure that wherever you're going, you're doing more business, you're engaging in more business than you are leisure activities. So if you're coming out to California to go to my alma mater's USC football game, and that's a 2-day tailgating event, but you want to write off your whole trip to California, your flight, your hotel, and all of this kind of stuff, your time doing business surely needs to be more than the 2 days that you would be engaging in business. So your trip would need to at least be 5 or 6 days to where 2 of them is leisure, but more than the 2 is business. And then on the days that you do business, you need to document. This part applies to anything I will say about expenses here, now, later, ever, is that you need to document. So you would need to document what you did that day for work, who you met with, what vendors you went to go see, what venues you went to check out, what photo shoot you might have done. Documenting those things, who, what, when, where was related to that expense. And then I always have a note section to things that are kind of like, there's a little bit of gray area. Let's add a note section to that expense and make a note of how this expense was beneficial to the pursuit of my business in earning revenue, right? So like,
love it.
Yeah.
And I wanted to say also, love your example. I know you're a big USC fan. We actually have one of our publishers on here, one of our audience. Kimberly has got it all figured out. Her business is tailgating. So genius.
See,
beautiful.
Like absolutely. Her tailgating business expenses wouldn't apply to me because my business is not a tailgating business. So that's why I'm saying they could differ. I want to give you one more example. That's a big one that's like contradictory. I've had clients who very legally have had a Netflix or Hulu write-off on their tax return, right? And when you just say that out loud, you're like, somebody wrote off Netflix or Hulu on their tax return. Like, what do you mean? What kind of a tax write-off is that? Maybe to you and I, it wouldn't be because watching Netflix is not a tax write-off. But for like a marketing agency who has to have that subscription to be able to see what kind of ads they play, how long their ads are, where they place their ads, and to use that in their meetings and things like that, or in their strategizing, that's definitely a tax write-off because it would be the same as someone else who uses a different tool. At this point, it's not a Netflix subscription, it's a tool they use for whatever they needed in their business as it pertains.
Are you creating content about entertainment? Then yeah, Netflix is your big thing. Of course, you have to have it. It's necessary. Exactly. So we've got Marcy here. What about travel publishers who write about each trip they take? Is the blog post enough documentation for a deduction?
This is such a great question. And I actually answered almost something specific to this in the summit that I mentioned to you about that Laura Peters invited me to speak at. And she, I'm sorry, not she, but one of the audience members asked the exact same questions, which Laura taught me something that is so beneficial to this answer. I shared with you that I'm not the biggest tech person, so I'm just learning the ropes and getting online and SEO and landing pages.
We want your expertise for taxes. That's what we want.
Thank you. But Laura taught me that Google has made an update to where, and I feel like maybe this pertains in the content creator community and other places that I've seen it, but specifically to the bloggers who are writing about where they're going. Laura taught me that Google has made an update to their platform to where when you post, I think like a blog article or an image or a picture of a specific place and it's tagged in that place, that then you can see the revenue that's generated from that exact post, that image, that design, so on and so forth, that content, let's say, right? So that would be super beneficial, that you can always just log back into your Google Ads account, I think it is, and see that this post that you wrote, so picking up from where she said, is it enough to write the post? Well, it would be enough to write the post and then to be able to show that this post generated this money. So I think
excellent.
Right. So I think like Laura taught me, I think that's what it is that she was explaining to me, that you can see which content, which blog, which piece of, design brought you those dollars. So now, yes, it's definitely legitimate that you went on the trip, you created this article about the trip, you posted it, and you made this much revenue. But to be honest, I would go further than that, because I think of it from like the conversations that I've had with auditors, right? So like, I know what they're going to ask. I know what they're going to look for. And me being on the other side of the table from this young lady who asked this question, I would say, well, you could technically go anywhere and write about anything. And yeah, but what about while you were there? Like, how do I know that the trip that you went there, outside of writing about it, maybe when you came home, how do I know the trip there is what made you the money, like while you were there? How do I know you didn't Google and learn everything there is to learn about this place and write about it, right? And then just go on to that place and vacation and not do any work. So I would say, in addition to what she said, which is writing about it, taking pictures and all of that, and then of course having the Google AdWords account that show how much money was made from that, you also want to document while you're there. So
fantastic. Yeah, and that's fairly simple for travel bloggers as they're taking their notes.
You're already
also,
documenting.
Just to add in, Marcy followed up, and I was going to mention this as well, that actually it's even easier to see it in the Mediavine dashboard, your earnings and things like that. So very simple. Good. You don't have to go into Google Analytics if you'd rather not, or into your all that. We got you. Okay. Another tip on deductions.
Yes.
Rosalind from YouTube says, for food bloggers, how do we report food ingredient purchases as well as transportation to and from the store or online delivery fees for specialty food items?
Okay. So this is going to be kind of a general answers to apply that applies to more than just this specific food bloggers. And so my response to this is, one of the best things you can do to have proof is to separate your groceries and your expenses in one account, aside from the account that you're using it at, using for your business. Because food is one of those things where, like, how are you going to differentiate who ate it and why I ate it? And like, how am I going to document whether I ate it for business or whether I ate it, right? So unless you were like going to a business function or like traveling and taking on a business expense at a restaurant, that's not this question. This question is, I'm a food blogger, I'm buying food ingredients and making it. So back to what I was saying earlier about making sure that all of your business expenses are in one business bank account, separated from your other casual day-to-day expenses. That way, if you got audited, and we can talk later about chances of getting audited and things like that, but if you got audited, one of the simplest things you can show is like, hey, here's my Ralph's grocery shopping that adds to like $1,200 for a family. Let's say $1,200 with inflation. Maybe let's call it like $1,500, $1,600.
Only if you're buying eggs.
Yeah, exactly. Can you imagine that? I just realized that, and I was like, what is going on? $16 for a carton of eggs? Like, what are we doing around here? Anyways, so I would say, like, being able to show an auditor that, like, hey, you know, for a family of 4, the average grocery shopping is like $1,200 a month, $1,500 a month, let's say. And look, I have that $1,200 to $1,500 here in my, you know, regular grocery shopping bank account, personal expenses. Everything that I do here somehow correlates and corresponds to that video I posted that day because of the timing, right? Like, I ordered this food on January 1st. You can see that I posted about it January 2nd. So it's clear. The overall takeaway I want to make is a lot of this is how you structure and document to take the expense. That's why I started it off with saying most people, the number one mistake they make is leaving money on the table because A, they don't find it worthwhile to document the process in order to legitimately take the expense. But if you do, then you can legitimately take the expense.
So love that. Love the documentation, whether you're using QuickBooks or a Google spreadsheet, whatever you're using, whatever works for you. Let's say for this year, maybe you haven't documented what dates are important. What can people be doing now? Maybe if they haven't documented, what are our important deadlines?
Sure. So I heard that as 2 different questions, deadlines and what can they be doing? So I'll answer those 2 separate questions.
Let's start with deadlines, please.
Deadlines. The first one approaching here in about 4 days is January 17th. That is the fourth quarter estimated quarterly tax due date for 2022. So if you're a content creator, we'll get into this later too, you should be more than likely filing quarterly taxes. The dates for the quarterly taxes, the fourth one is always in the following year because they give you an opportunity to close out your fourth quarter, have 2 weeks to do your bookkeeping and accounting to know how much your quarterly taxes should be. And then they're usually due like January 15th, 16th, 17th, depending on the day of the week that it falls. So the first one is January 17th. And this is the last opportunity for anybody to send a quarterly estimated tax payment for the earnings they made last year. Okay.
Fantastic.
That's first deadline. The second deadline would be for anybody who's operating as an S corporation. Their deadline is March 15th. Anybody who's just filing individual taxes, their tax deadline is April 18th this year. Normally the 15th, but since it falls on a weekend, ends up being the 18th. Those are just the actual due dates. So 17th being quarterly taxes, 15th being S corporation, April 18th being the individual tax deadline. Now, if you need more time, you can apply for an extension. And so that would make your S corporation tax return due date September 15th, and it would make your individual tax return due date October 17th.
Wonderful. Excellent on the deadlines. Okay. So where should we start? If we're getting ready to start, where do we start now?
Gather your expenses.
Okay.
Start going through your bank accounts. So sit down and make I'm a very to-do list, checklist, both digitally and notepad kind of person. So I would say first things first, grab your notepad, write down a to-do list of what you need to do. On that to-do list, I would write gather expenses, gather income, and just kind of like package everything together so that you are ready to, if you're doing it yourself, which I don't recommend, or if you're working with your tax professional, to be able to pass it on to them. So in that first step of gathering your expenses, I would say visit your bank statements. So you want to take all 12 months of bank statements. If you're a pen and paper kind of person, highlight your business transactions, maybe all the gas, green, all the phone yellow, do that. And then go through your 12 months bank statements. Then you want to go back through them and categorize or group the different categories, right? So all the gas, all the everything, group it together so that you have one total number for each category of an expense that you incurred, whether it's uniforms, whether it's subscriptions and dues, anything of that nature. And you want to do the same thing for your income. Now, the income one is something that I'm going to touch on maybe earlier than you might ask about it, but because it pertains here.
Please.
You also want to do the same thing for your income because content creators usually earn income from multitude of different places, right?
Absolutely.
And those multitude of different places don't always send you 1099s. Some companies don't care to, some companies don't want to take on the expense of issuing 1099s. For whatever reason, you might not get a 1099 from every place that you earn money from. So it's important that you yourself track and have, on that spreadsheet, maybe like Mediavine income, Google Ads income, affiliate income from different companies that you affiliate with, and have a rundown of how much money you've made from each one of these places so that at the end of the year on the tax return, you are reporting the income that you made, regardless of whether that company issues you a 1099 or not, because they might not. And it's also the case, which is actually more problematic, the other way around. Sometimes they do issue a 1099 that you weren't aware of because you didn't track that income, or you don't remember that you did that $1,000 deal 9 months ago with that one company. They issue a 1099, you forgot about it, and you didn't get the 1099, whatever. Now you submit your tax return and you get a correspondence audit that says, we have more income on file for you than you reported.
Oops.
Yes.
So, probably won't go into, I think an audit is a separate episode all on its own that we will probably deal with there. But so starting now, bank statements, hopefully we have separate accounts. If we don't, then we're just going to have to put on our waders and go through the major, finding all the income, categorizing expenses, all of that. Okay. I'm going all the way back to a comment from Sonia, because I'm going to go into this. It's a big topic.
Okay.
She said she's not earning much revenue from her website yet, so she doesn't know if it's applicable for international content creators. But when do you know it's time to have an LLC set up? We also got S corps because we've been talking about some of that. We had that on our list. Jasmine, Sonia, I'm sorry, you read our mind. We were going to ask Jasmine. Here we go.
Yes,
Let's
yes,
dive
yes.
in.
Okay, this is such a huge question. I'm so happy that she asked it because it's like 9 out of 10 questions I get is about LLCs and S corporations. I have one sentence that I always start this answer with, which is to super clarify for everyone that having an LLC, standalone LLC, does not save you money on taxes. It is not a tax saving strategy. It is a protection strategy. So you don't go get an LLC because you want to save money on your taxes. You go get an LLC because you want to have protection in your business. Now, elaborating on that, you get an LLC and possibly elect to be taxed as an S corporation to save taxes. But you would, in order to do that, in order to benefit from being an LLC / S corporation, I want to stop and make a clarification that I feel like everybody needs to know. An S corporation is not an entity type. So you don't go open an S corporation. You can open an LLC or a regular corporation, namely a C corporation, and you can elect for the IRS to tax either one of those two things as an S corporation. So an S corporation is a tax election. It's not an entity type at the state level that you can create. At the state level, you're creating either an LLC or a corporation. And then when it makes sense for you to, apply the S corporation benefits or rules, regulations that you have to maintain while being an S corporation, you do paperwork with the IRS to say, hey, IRS, I want you to tax my LLC or my C corporation as an S corporation. So I just want to clarify that you're not going to go open an S corporation at the state level.
Y'all, I need a whiteboard. Okay. So what are your recommendations on when it's time to start making those decisions?
Sure. So LLCs, it comes down to like when you are willing to take on the expense, right? Because I said having an LLC, surely it's a great thing. Professionalism, you get a business bank account, you have protection in your business. And, a lot of people think like, oh, I don't do anything that needs protection. Like I'm not working on anybody's eyeballs or ears or heart or leg. Like I'm not going to mess anything up. But in reality, that's not like, you don't have to be working on somebody physically to possibly cause an injury that you could get.
Oh, yeah.
You could be doing anything. You could be breathing and get sued in your business because there's just somebody out there that does that. Like I shared with you so many times that I'm not a tech person. So like 10 years ago when I started this journey, I was like, oh, I need a website, right? So I Googled taxpayer, grabbed the image, put it on my website and got sued for $3,000 because I didn't know that I can't copy and paste that image, right? So like you don't have to inflict harm on anybody to get sued. So having an LLC is good for protection to make sure that if you do get sued, no one is able to go after your personal assets as long as you're operating the LLC properly anyway and not piercing the corporate veil and like mixing business. You can't be an LLC and be mixing expenses in your personal account and your business account because your protection is out the window when you do that because you're not operating in the form and fashion that you should be. So having an LLC and when you should do it, I would say as soon as you are willing to take on the extra expense of having one. What is the extra expense of having one? It depends what state you live in. Like in California, there is an $800 a year annual fee for having the LLC, regardless of whether you make $1 or you don't. Along with that, you also have to file an LLC tax return when you have it, regardless of whether you make $1 or you don't. So even if you don't make any money, you would have to file an informational return. So my answer to that would be take on the expense of having an LLC when you feel comfortable maintaining that expense. Not, oh, I had it, I don't want to pay it, I didn't really use it, let me close it down. Most people don't close it down, they leave it there. 4 years later, they're getting letters that are like, hey, this has been open for 4 years, you haven't filed on it for 4 years. So yes.
Like all the different individual channels that I'm subscribed to on Amazon. There are so many. There are so many, guys. I forget about them. And I'm like, why is my bill? What did I? Yes.
I know. It happens. Exactly. And so the same thing happens to content.
Thank you, Jasmine. Perfect. Okay.
Yes, absolutely.
Could we talk about quarterly taxes? Because we brought them up. We asked about them. You said likely that content creators should be paying their taxes quarterly. Give us the who, what, when, where, why, and how.
Okay, of course. So quarterly taxes, what they are is an estimated tax payment that you make to the IRS on the due date of the quarterly tax return date, right? which is a speculation, a good speculation, right? It's an estimated speculation of how much taxes you would owe based on the money that you earned in that previous quarter that you're filing your taxes for. So if you made $3,000 in first quarter of the year, the first quarterly tax filing that you file as a quarterly tax return, it's not an actual tax return, it's just a payment that you're sending to the IRS. But of course, you got to do some math to get to that payment, right? So you're taking how much you earned in that previous quarter, and you are going to prepare a quarterly tax return to send to the IRS. Now, that's what it is. Why are you doing it? Who is doing it? What kind of taxes are you paying? Because you are a self-employed individual who's earning money that's not being taxed as you earn it. There are no taxes being withheld from this money. The IRS is not getting their money when you get their money, and the IRS doesn't like that. The IRS doesn't want to wait till next year when you file taxes to get the money that you owe them for all the income you made the prior year. They want their money as you make your money. So think of it like when you're an employee and you get a paycheck from somewhere. Let's say you work for Target and you get your paycheck. Normally, you'll see federal taxes withheld. You will always see Social Security and Medicare withheld, right? So the quarterly taxes that you're filing as an independent contractor, content creator of any sort and paying quarterly taxes, you are paying the taxes that would otherwise be withheld from your paychecks if you had a paycheck. So that's Social Security, that's Medicare, that's federal. If you have state income tax applicable to you in the state that you live in, you're also filing state quarterly taxes. So going further into this explanation, the IRS is not fond of anybody submitting a tax return with a balance of more than $1,000 due. So when I do your tax return at the end of the year, if you owe more than $1,000, that's when the penalties start to kick in for not paying quarterly taxes the year prior. $1,000. Right. $1,000 is about it is the amount that they're like, okay, you can owe me $1,000 and it makes sense for you to be your estimations for the prior year. It makes sense for it to be within $1,000 of what you actually owe me. Like as long as your estimations are within that $1,000 and you owe me $1,000, we're good. We're Gucci. We're square. But if you're doing your tax return and you owe me $50,000, that's $50,000 that I should have had from you last year that you didn't give me, and you didn't pay me interest. So now they're essentially penalizing you for not having earned their money as you earned your money.
You're making yourself a payment plan.
Exactly. And then also, it's not even really just for the good of them. Like, yeah, great. We want to keep them happy and off our back. But like, you don't want a $30,000 tax bill or a $10,000 tax bill at the end of the year either. So you should be budgeting your taxes as you earn money, because now it's just a matter of like, this money you have is not taxed and you might spend it, you might do whatever with it. And when it comes to the end of the year and you file your taxes and you have this big bill, now you're going to have a payment plan with the IRS, which is a new expense this year, but that's from money you earned last year. And then now you're using your money from this year to pay for taxes for last year, which is probably going to put you behind in paying the quarterly taxes for the current year you're in, because you're still making a payment plan for last year's taxes. So quarterly taxes is a must for yourself and for them to keep them off your back, for you to have proper financials and budgeting and so on and so forth.
Genius. Okay, Jessica Conboy, if you are a W-2 employee or your spouses and you file married jointly, do you still need to pay quarterly taxes, assuming the W-2 taxes withheld are more than enough to cover the extra taxes from content creation earnings?
Great question. So the end of her sentence is assuming that the W-2 taxes are withheld are more than enough to cover the extra taxes for content creation, then no, you don't need to pay quarterly taxes. Remember, the goal of quarterly taxes is to make sure you don't owe them more than $1,000 at the end of the year when you file taxes. In her situation, she said, married, my husband has a W-2, my spouse has a W-2 employee, whether there are children or not children, whatever the case might be. Usually in this type of tax return that I file, the child tax credits or earned income credits or all of the credits that you get that pertain to your regular tax return usually do end up washing out the taxes that you would owe for your content creation earnings. So just think of like, if you're not filing taxes single, you're filing taxes with another household member and their income is added. It all goes into one pot. All of the income goes into one pot and the tax liability is one pot. So if it's already been paid for within that pot because the W-2 had enough taxes withheld, then great, there's nothing owed at the end of this tax return when we file, at the end of this year when we file a tax return for this pot. But sometimes what happens is the W-2 does not have enough taxes withheld, or let me use a better example. Let's say there's no children in the household, so there's no additional credits coming on the tax return. So let's just say it's spouse 1 on W-2 and spouse 2 content creation, right? You can't assume that just because there's W-2 taxes withheld here, that it'll cover the income over here, because the taxes withheld over here are probably enough for the income that was made here. So W-2 income, taxes withheld, those are good there. Content creation income, no taxes have been withheld here. Unless there are other credits on the tax return, like earned income credits or child tax credits or energy fuel credits, where you are expecting the IRS to owe you a lump sum of a few $1,000s for those credits, then you can assume that those credits will cover the taxes you owe on your content creation income. But I wouldn't assume that I wanted to just finish it off to say, but I would not assume that my spouse's W-2 taxes being withheld is enough for me not to file quarterly taxes.
Very helpful. And Jessica agreed. She said, yes, exactly. That's been our experience with the child tax credit. But
Perfect.
Love hearing that it's a great caveat to where if there is not additional mitigating factors, you need to go ahead and continue. Okay. Right. Alice asked a question and we are running low on time, but I want to make sure we get her. She said, are quarterly taxes the same regardless of you filing a single owner LLC or LLC filing as an S Corp?
Yes. So they are the same. And the reason why I say they're the same is because, remember, a single member LLC is considered a disregarded entity to the IRS. So when you're a single member LLC and you're not an S Corp, you have not elected to file taxes as an S Corporation, you're still a single member LLC, you're not filing a separate tax return for the IRS. You're just including the same Schedule C that you would if you weren't an LLC. That's why I said LLCs have no tax benefits to them. You're not filing a different document. You're not doing anything different than the person sitting next to you who's not an LLC. Now, when you're an LLC, so I say that to say, yes, you would still be filing quarterly taxes the same way we just got done talking about. Now, when you're an S Corporation, you have to remember that an S Corporation is considered a pass-through entity. So that means whatever income is earned at the S Corporation level, the profits of that corporation income is trickling down to your personal tax return, and the taxes you owe on that income are included in what you pay on your personal tax return. And I'll clarify to say that's unlike a C Corporation. A C Corporation files taxes, it has its own tax return, and it pays its own taxes based on what the tax return showed due. An S Corporation files the tax return, does not pay taxes, it spits a K-1 to the individual. The individual includes that K-1 in their personal tax return to pay taxes. So none of this changes the quarterly tax filing responsibility, because the S Corporation income will pass down to you in a K-1. So regardless, the tax liability will be a personal tax liability to you.
Very helpful. Okay. We've reached the point of our last question, and I'm going to make an announcement, but I wanted to give you a second to think about it while I make that announcement. What are some great resources you would want creators to have for this season, whether that's written sources or other tech professionals in the space, yourself, all of that. So think on that for a moment. And I'm going to say that, guys, we are back again on Thursday, January 26th. We'll be again at 12 p.m. Central, 1 p.m. Eastern, and it is going to be a State of the Vine with our CEO, Eric Hochberger, and we're going to be talking 2023 roadmap, industry concerns. We're talking privacy. We're talking grow. We're talking earnings. We're talking the economy. We're going to be talking all of the things that concern you as a content creator with our favorite CEO, Eric Hochberger. So join us there. We'll be talking more about that to come in the future. And Jasmine, I have to say, this has been so incredibly helpful and wonderful and fun, which is, taxes are fun when you're talking about the taxes. I love that. That's great. Resources for our people. In addition to, guys, we're going to be sharing that one-sheeter out with you with all of those links.
Sure. So I have two off top of my head that are related to me. One is a 1099 guide that I prepared for our viewers, and I have shared the link with you so that you can share with the audience, and they can just put their email address and get the 1099 guide. That is, and it's updated per the recent debacle that happened with the IRS regarding 1099s. You know, they were like, oh, if you got $600 or more via Venmo, we're going to give you a 1099. And everybody was like, whoa. So if I'm like, you know, splitting the meal with someone at dinner, am I getting a 1099 for the money that they sent me for like paying? So that was a huge thing that thankfully the IRS has put on pause. And I have included all of that in this guide that I prepared. So the quick guide, yes, it's free. You put in your email address, you'll get it. It's going to tell you about the different kinds of 1099s, how to expect it, when to expect it, why you should expect it, like if it pertains to you. So that's number one. Number two, I mentioned briefly earlier that I did just create a course. It's a small course called Taxes and Accounting for Content Creators. And I have created a special discount code for all of our viewers with a great page to go to. So that's also shared with you. The course includes 5 modules, video modules. 4 of them are specifically about almost everything we talked about today in detail. So module is about quarterly taxes. 1 is about LLCs and corporations. 1 is about deductions, which pertains to the 30 deductions ebook that's also included in it. I kind of go into detail about that. So yeah, 4, and then 1 is just a basic tax info you need to know to understand the rest. And then along with those videos comes, you know, I think like 10 or 12 spreadsheets, income and expense tracker, so many great things that you need, guides, tax tables, how to calculate your taxes, how to calculate your quarterly taxes. All of that comes in the guide as well, on top of the fact that it comes with a 1-hour Q&A with me, a group Q&A. So I would, you know, selfishly, and, you know, I don't know if I'm supposed to be tooting my own horn here, but I would say that's a good course to get. Hey, wink, wink, right? It'll give you all the information you need to prepare for taxes, and it's a tax write-off. Because to piggyback on the question you asked me earlier, all continuing education is also a great write-off for content creators. If they're learning about SEO or whatever courses they're taking to better their business, is 100% a tax write-off. So the course is attached.
Talk about double dipping. We have linked that up in our resources. The regular price for taxes and accounting for creators is $397. Jasmine is giving us a discount code, which is Teal Talk 23 for our audience here. It is $100 off that price. So, although it won't be as much of a write-off if you use the discount. So there's just, you know, it's a conflict. It's a conflict of interest.
I want to say though, I'm not the type of tax strategist I am. I'm not here to tell you to spend more money to save more money, because I always say, like, the percentage you're going to save, like if you don't need this expense, don't spend $100 just because you're going to save 10 on your taxes, right? So I want to help you implement tax strategies that don't require you to spend more money. I want to help you implement tax strategies that are things you're already doing but not doing the right way, or things you don't know you can be adding to your tax return. So use the discount code.
Amazing offer, amazing information throughout this time we've had together. Everyone, you've got all the information there in the comments to reach out to Jasmine to get more information from her. All of her contact is there. So helpful, Jasmine. It's pretty much a given that we're going to have you back. But thank you for spending this time with us, and Happy New Year.
Pleasure. Happy New Year to you. It's been my pleasure. I look forward to coming back and talking about things in more detail that are above just, you know, the basics of expenses and LLCs and stuff. Because as you see, it's been 50 minutes and we've covered a few things, but I can talk about this for days.
Yes, and we love it. We will have you back, everybody. We will see you in a couple of weeks with our CEO, Eric, for the 2023 roadmap. Have a wonderful rest of your week. Bye, everyone.